Thank you very much.
Okay, so about an hour long, as usual. So I'm gonna go ahead and share some of the things that I want to show you guys what he was talking about here. He wants this rate to come down to 2%. He said it so many times that this is gonna go down to 2%. And from what we're seeing, right, from December 2.6, 2.5, 2.5. And by February, it seemed like it was heading to the right direction. Now, March went back up to 2.7. So now Jerome Powell and all the Fed governors, they're like, all right, maybe we're trending into the wrong direction. Okay. So when he said in the press conference that the policy is 2%, this is what he was talking about. He wants this to get to 2%. Now, is he going to start cutting rates at, let's say, 2.1%? Possibly. But it looks to me, or it sounds to me like he wants this rate, personal consumption expenditures price index, this PCE price index, to get down to 2% before he even starts cutting. Now, the risk is that the PC inflation, all right, let's say it comes down to 2%. What does that do to the unemployment rate, right? So unemployment right now at 3.8%, going back up to 4%. Historically speaking, it's always been like around between 4 and 5%. I would say 4% is pretty healthy. 3%, is excellent, right? I don't think I've seen below 3% in my lifetime. I don't know. But around 2018, 2019, that's when we started to see unemployment rate at 3%. And then that's when the Federal Reserve raised interest rates to make sure that it doesn't overheat the economy. But anyway, that's what they're talking about. All the reporters, they were asking questions is that, hey, if we keep the rates where it is now, right? 5.25, 5.5%. And the inflation comes down to, let's say, 2.3, 2.2. But what if unemployment rate shoots up to 4.5 or 4.6 and any weaknesses in the labor market? Jerome Powell pretty much said that, we're just paying attention to the PC inflation. We are paying attention to the labor market, but we're not going to make any changes unless we see a sudden change in the labor data, right? So if we see something outrageous like 4% to 4.5%, that is a significant increase. You got to realize that it's tens of thousands of people, hundreds of thousands of people when you think about the percentage wise when it comes to unemployment. So if it goes from 4% to 4.5, like we saw during the global recession in 2008, 2009, then that should trigger the Fed and say, whoa, hold on, are we doing too much where maybe we need to cut the rates by 25 or 50 basis points? They're not going to cut the rates by 200 basis points or 300 basis points all at the same time. It's not going to happen. But that's what he was talking about, just to put things in the context, okay? Now, I said this at the beginning of the live stream. So the next inflation report, CPI data, comes out on the same day the Fed announces their decision on interest rates. So that's on June 12th at 8:30 a.m. Eastern Standard Time. And that's when we're going to get inflation data. Right now it's at 3.5%. If that's going to come down to 3.3, 3.2, or if it's going to remain the same. If it remains hot, they're most likely not going to cut rate. But check this out. CME is already talking about the possibility of raising interest rates by another 25 basis points. So this is let me zoom out here. This is the June 2024, June 12th FOMC meeting. So they're saying that there's a 90% chance that the rates will remain the same at 5.25 to 5.5%. And then there's a 9.1% chance that the rates will come down by 25 basis points. And there's a 0.7% chance that they become hawkish and raise the rates to bring inflation back down. So chances of that happening, like Jerome Powell said earlier, it's very unlikely. Those were his words, that the hike at the next meeting is unlikely, okay? Now, what if inflation comes out, let's say 3.5 to 3.8%, going back up, and PC inflation goes from 2.7% to, let's say, 3%, right? Now, you got a big jump in inflation going into the summertime, going May, June, July, August. Those are the months that American people spend a lot of money on travel, all of that, right? Then they could consider and say, you know what, this is too hot. We need to calm everybody down from spending. And housing is one of the biggest contributing factors to why inflation continues to go up. So they could just say, we're going to increase the rates by 25 basis points. The market is certainly going to freak out momentarily, and they're going to sell off like crazy, probably just for the day, if they raise interest rates. We'll see. Is that going to happen? Don't know. It's going to depend on the data. And that's why I do live stream every time CPI comes out, every time the FOMC has that meeting, and every time I, go over, summary of economic projections. That's going to come out in June, right? So let me pull that up real quick. I was reading this during the press conference. Some of the questions were stupid. So take a look at this, okay? So this report comes out every quarter. So if you don't know what this is called, summary of economic projections. So this comes out of the FOMC meeting every quarter. So the last one that came out was March 20th. Okay, so March 20th, before the PC inflation came out at 2.7%. So they were projecting that PC inflation for the year at 2024. Do you see this? I can't really mark it this is on the website, but take a look at the third one from the top. It says PC inflation. So at 2.4% for 2024. We're at 2.7. I'm sorry. Are we on 2.6? Yeah, we're on 2.7 right now. So 2.4 will be the average throughout 2024, maybe finishing it. If that doesn't get down to 2.4 by June, they might raise that and just say it's going to go from 2.4 to 2.5, maybe 2.6. We'll see, right? In 2025, they're projecting the PC inflation to go to 2.2 and then possibly going to 2.0. If that's what they're saying, that the rates might not come down until 2026 with the 2% PC inflation, they could very well keep the rates where they are throughout 2024 and then slowly cut in 2025 if it gets to 2.2 to 2.1%. That's my own assessment. Please don't take my word for it and say, Sai said this is what's gonna happen, so I'm gonna do this and that. All right, this is just my own assessment. I do this, right? I read this probably way too much. But anyway, here's something else that is a little concerning is the GDP, right? If you look at the top line here, change in real GDP, December projection was 1.4 for the year 2024. Quarter one came in at 1.6 as opposed to 2.4. So it's already lower than the original projection for Q1. So what if GDP remains at 1.6, 1.5? Does that mean they're gonna cut the rates? No, not necessarily, right? But if it does go down to below 1%, let's say Q3 GDP was at 0.8 and it goes down to 0.2. In 2025, we see a negative GDP for Q1 2025, and let's say it goes down to like negative 0.2, right? And then it goes to another negative 0.6. That's a recession. Now they got to take a look and see what's going on with the unemployment rate. What if the unemployment rate, if you look at the second from the top, it goes from 4% to 4.5%, like I said earlier, and it goes to 5%, it goes to 5.5%. But PC inflation remains at about 2.4, 2.3. The Fed might just say we need to cut rates now because now we tightened that labor market way too much, and we need to cut the rates and for businesses to start borrowing at a lower rate again so they can retain their employees, do more contract work and all that stuff. If you look at the company earnings, right, they're coming in, generally speaking, they're coming in a lot lower than expected. So the earnings haven't been as good as we had hoped. We'll see what happens going into Q2, Q3, Q4, and then we'll see what happens with that, okay? So the next FOMC meeting, write this down, June 12th, 5:30 a.m. or 8:30 a.m. Eastern Standard Time. We're gonna get the CPI reading in the morning, and then they're gonna make a decision on the interest rate at 11 a.m. or 2 p.m. Eastern Standard Time. And then we're gonna have the same press conference, and then we're gonna hear more about what direction that they're gonna go to, because after June 12th, we just have July 31st, and then September 18th, we were gonna just have 4 Fed meetings remaining, right? I know he said that he was a little irritated during the press conference when people were asking him about, well, we got the election year going on. What do you think that you're going to cut rates before the election day? Remember, election day is November 5th, and then the FOMC meeting is November 7th. So a lot of people think that they're going to cut rates on September 18th, maybe by 25 or 50 basis points. He emphasized that elections, politics, everything will play no part in their decision-making process. Valid, okay? But perception is another thing. That's, perception is a whole different game, right? We also have to remember, Jerome Powell was appointed by Trump. So if Trump says, I'm gonna fire Jerome Powell if I get elected, the next chairman is still gonna act based on, supposed to, right? based on in the best interest of the American people, is what they say. But if you go back to 2018, if you guys remember, in September 2018, we had a stock market crash. Like the market was doing so well all the way till September, and then the Fed, Jerome Powell, came out of nowhere and said, we're gonna raise rates. We're like, what? No reason, just gonna raise rates. Stock market sell off, and Trump tweeted or X'd, whatever, and said, what the hell are you doing? I need you to cut the rates. In 2019, they cut the rates. So perception. It's going to be pretty interesting kind of going forward. This is something else that he was talking about, was the unemployment. So ignoring what had happened during COVID, right? It went to 14%. So going here at 3.8, we've been pretty consistent at 3%. The reason is in COVID, a lot of people retired early. Baby boomers, some Gen Xers, they retired early from the workforce. So there's a shortage in the labor market. So for the longest time between 2021, 2022 here, and into just about right here, people were still hiring in certain sectors, right? But we're starting to see a little bit of weakness going into 2024 from all the layoffs that are happening because of the Fed funds rate that have been set in place since July 2023, right here. This was when July 2023 was when the Fed raised interest rates to 5.25 to 5.5, and it's been sitting there for a while. Now you see it's 3.5, 3.8, 3.7, and now it's at 3.9 and 3.8. If I had to guess, for the April data, which is coming out on Friday morning, that's probably gonna go to about 4% unemployment. And we'll see what happens for May and June, because that could very well be going into 4.1, maybe 4.2%. We'll see what happens. This is a very interesting 2024. That's all I gotta say about that. So yeah.